Live from Sydney, I'm Paul Allen, and this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Apple shares plunge after raising global prices on Macs, iPads, and the Vision Pro. The company seeking to offset severe memory chip shortages. Oil prices are in flux after a cargo ship was attacked in the Strait of Hormuz. The incident renewing safe passage concerns through the vital waterway. And as markets navigate the fragile ceasefire and inflation risks, we discuss whether AI is still the investment focus with Polka Mishra, partner at Javelin Wealth Management. Also ahead, Grand Theft Auto 6 pre-orders are live. The price tag's already drawing some backlash. We look at what the higher pricing could signal for the wider gaming business. NYU Stern's Joost van Dreunen joins us on the economics of GTA 6. He thinks sales could hit close to $3 billion in the first year, and that's despite that hefty price. Let's take a look at markets, and that screen is completely red. Very much a risk-off day to close out the week. The Kospi once again in focus. Now off 7.5%. It's down about 8.6% for the week so far. We did have the sidecar activated by the exchange earlier to stem the selling. That can only happen once a day, but the selling not really stemmed. We're off about 7.5%, a little more than that at the moment. But tech across the board getting hit pretty hard. Nikkei futures off 4.5%. We've seen SoftBank fall pretty heavily as well. CSI 300 off 3%. Apple suppliers, LG Innotek on high. Luxshare, they're all softer as well on the news that Apple's going to raise some prices on some products due to that memory shortage. Well, Bloomberg Intelligence says Apple's price hikes are likely going to help offset some product gross margin pressure as memory costs climb. Senior technology analyst Anurag Rana joins us now with more. So Anurag, is the drop in stock prices all due to Apple's price increases, or is there a bit more at play than just that?
A little bit of both. It has, you could say that that's the big catalyst. But one of the things you have seen is Apple's valuation's gone up quite a bit over the last 12 months, especially as people are looking to find place to hide, given the hyperscalers keep on spending more. So we've seen their valuations getting hit ever since Google decided that to announce that equity offering. Microsoft's been under pressure. Amazon's been under pressure. So Apple remains the one company that has done exceedingly well when it comes to their valuation, and I think this is probably one of the catalysts that drove that.
Yeah, and considering the structural reasons for that decision, is this just the start? Can we expect more?
Oh, absolutely. We do anticipate more price increases to come. When you look at Macs and iPad, they are roughly 7 to 8% of total sales, each of them, Macs and iPad. But iPhones are 50% of total sales for Apple, and we anticipate by the end of the year, when they come up with the newer models, they will increase prices over there. But our view is they're going to happen only on the highest end models, where the buyer is not as price sensitive as it is on the base model. So let's see what happens there. But our view is it will happen by the end of the year.
Is the AI tech trade, semi-trade, just more broadly starting to look quite frothy? And bearing in mind, we have been asking that question for quite a while now.
Yeah, every time somebody asks me that question, it still keeps on going up from that. So it's a very tough question to ask, frankly. One of the things is clear. Right now, there are a handful of trades that are working, and that's been the story for the last, I would say, 6 months. You have to go long semiconductors. That's really what's happening across the board. When I say that's the pure play way to play AI, whether that's memory stocks, whether that's chips, and so forth. Where we have seen some divergence is the hyperscalers. They were doing very well for the last several months, except once Google's announced that equity offering, and since then they have taken a dive. And then the last trade is everybody's selling software, and there is no change to that sentiment almost for like 7-8 months at this point.
All right, Bloomberg Intelligence Senior Technology Analyst Anurag Rana there. Let's get market insights now from Polka Mishra, partner at Javelin Wealth Management. And Polka, I want to start off on that theme as well, just the aggressive selling that we've seen, particularly in Korea today, the Kospi activating that sidecar, as I mentioned. Is there any reason to be nervous or fearful of a deeper pullback, and not just the Kospi, but the tech sector more broadly?
Yes, Paul. I think the one sort of reality check that market finally got yesterday was Apple increasing prices of its products. That's actually shown how there's not unlimited money in the market. If the chip makers are benefiting, then the product makers are going to suffer. So it's the first sign that it's not an endless rally. I think there's still legs in the AI space, but investors have to be more selective. So at this point, it is the memory that is the demand-supply gap which is actually in play, and that is where we are seeing the upside coming through, and hyperscalers have now started to struggle. But yes, the data centers need to come through. So the hyperscalers don't have a choice but to pay for that construction. So we need to see the other aspects of the value chain to invest. So it's not that the AI story is completely crumbling, but we have to be selective in what parts of the value chain we invest in at what time.
Yeah, when you are looking to invest further along the value chain, can you give us some more sort of stock-specific ideas about how you'd approach that?
So we generally look at baskets rather than individual stocks, but we've talked about the Korea market being frothy, but at this point, these are the two stocks which are benefiting. So Samsung and SK Hynix are important. Micron is another one. So the chip manufacturers across the world are going to benefit. The risk to them is if China comes up with a chip which is a lot more effective, a lot more cheaper, then you might see a correction in these stocks. But at this point, these are the ones, they're the top few players which are actually expected to outperform even in NVIDIA, because it's more a memory play than a GPU gap.
When you do look across this tech complex, does anything stand out to you as, well, looking far too frothy? And we were discussing in earlier shows the case of GPU, up 2,000% since its listing. And some of the Bloomberg Intelligence modeling around this implies a revenue of $69 billion by 2035. I mean, that's bigger than the forecast for all of China's tech sector. When you look at a case like that, what do you think? And can you see others like it?
So it's changing so much on a daily basis. I mean, we've seen how even something like a SpaceX has moved so much. So it's almost on a weekly basis. There's a new news, there's new element, there are new contracts being signed. But let's not also forget that a lot of these stories are right now still supported by solid revenue growth. So Micron was that surprise, right? Where not a surprise, but it still was a surprise despite investors having very high expectations. So while there is revenue support, while there's revenue growth, and while there's this demand-supply gap, that's explainable. Where we struggle to see probably an Anthropic, right? When we start looking at the cost of the adoption of AI, the same thing is going to happen on the software side as well, on the tokens, for example. That's when we get more worried about. The other risk that we are more worried about is the debt that is being raised by companies which are not cash flow positive. That's where we think that there can be a bigger bubble. There's a bigger bubble building which could burst sooner rather than later. But for the companies that have strong revenue projections and they have been revising their earnings upwards, I think that is a bit more sustainable part of the AI rally.
You, of course, have some interest in private markets as well. I'm wondering if you can talk to us a little about the valuation landscape between some of these late-stage private names and some of the big public names that we're seeing.
Yeah, so late-stage private... a lot of the valuations, especially in the private market, we're not sure if they are sustainable. We are not seeing the revenue visibility. Forget about profitability and cash flow. And we saw Anthropic is now pushing the IPO forward by a year, most probably. And that's probably a reflection of that. So In terms of the private market, the bigger risk is, of course, how much we don't even know how much private debt is going into these companies. We haven't been able to analyze that, and it's private debt, so it's not as visible, and we cannot analyze it. So that's another factor with these companies where we don't have the visibility on the numbers. That could impact the market. It's not going to impact, though. You just have to focus on the fundamentals to survive a market like this. You have to focus on cash flow story, you have to focus on the profitability story, and you're seeing that even from the hyperscalers, even though they haven't performed, even though the Mag 7 is effectively down this year, but these are not companies that are at risk. They're just investing, and the investments may not pan out, but they're talking about billions of dollars of revenue. So it's a slightly different story from a dot-com bubble where there was no revenue at all. So not so worried about that pocket of companies.
What do you look at in a hedge at the moment around that tech story, particularly around sort of emerging tech markets in Southeast Asia and India?
So we are allocated to India. We've continued to remain allocated to India, although from an overweight we are sort of now more neutral, and that was more to be able, because the flows are driving more the markets. The sentiment is driving the market. But yes, India remains a story which is not an AI story. It's still got strong market fundamentals. It's got its own problems to solve in terms of private investments, etc. So that's one hedge. If you look at it, the Russell has outperformed all the other indices in the US as well. So focusing a bit more on value. So in Asia, when we look at Japan, you look at the domestic sectors like financials, which are important. Then you look at tourism because of the weak yen. So there are other plays that you can look at. Even Korea, for that matter, when we went positive on Korea, our thesis was around the corporate reform. It was not the AI story. The AI story took over, and it's reached levels that we thought it'll reach in 2-3 years. But there is that rotation that is happening in the developed markets, and we think that'll happen even in our markets in Asia, emerging markets as well.
Just as we've been talking, some breaking news, the Kospi has now triggered the circuit breaker for 20 minutes after more than 8% drop. So trading now halted in Korea for 20 minutes due to that circuit breaker. Polka, before we move on from the tech story, I just want to throw in one wild card for you. This is something we'll be discussing later in the show. Grand Theft Auto 6 pre-sales starting. This is a huge cultural event. I mean, Grand Theft Auto 5 12 years ago did $1 billion of business in 3 days. What's the follow-on here, though, for console demand, chip demand, and what does it mean for the broader tech space, if anything?
So I haven't followed that stock as such, so I don't think I can comment too much on it. Just on the story, though, even when you look at the console makers, they're facing the same chip pressures. Now, whether they are going to use the highest end of the chips or not are they going to adjust their development accordingly? But they also face the same impact. So even if they may get their sales number up, the margins are going to drop given the same challenges that other hardware makers are facing at this point.
All right, Polka Mishra of Javelin Wealth Management sticking around because when we come back, plenty more to talk about, particularly around how markets are reacting to fresh escalation in the Strait of Hormuz. This is after a ship was hit by an unknown projectile. More details on that next. This is Bloomberg. Welcome back. You're watching Insight. A cargo ship has been hit by an unknown projectile in the Strait of Hormuz, an incident that risks undermining the Strait's rapid reopening. A few hours before that attack, at least 3 commercial vessels, including 2 oil supertankers, appeared to turn around while attempting to cross the waterway. Shipping intelligence company Windward Maritime says the U-turns came after Iran's Revolutionary Guard Corps instructed vessels to turn around. Meanwhile, President Trump has insisted the Strait remains open.
They want to make a deal with us very badly, and we probably will. I think we will, but the Strait is open. Yesterday, they took out 19 million barrels of oil. That's the most in the history of the Strait.
For more on this, let's get to our Mideast correspondent, Abir Abu Omar. And Abir, can you tell us the latest about the investigations into who was responsible for that projectile being fired at the cargo ship?
Good morning, Paul. So what we know is that this is the ever lovely Singapore related ship through the Strait of Hormuz that suffered some damages to its bridge. This is the latest that we have in terms of the reporting on what exactly happened. The UK Maritime Services did say to ships going through the Strait of Hormuz to transit with caution. And so what we know is that over the past couple of days or so, or over the past week really, ships have started to make their way back through the Strait of Hormuz after this MOU was signed the prior week. And Paul, we've started seeing the trickle of movement. About 60 or 68 million barrels of crude oil were making their way through the Strait of Hormuz. It's not clear yet if this is just a blip along the way. Markets have reacted to this almost instantaneously with Brent crude prices going back above the $72 per barrel levels. But now we're seeing them lose a little bit more. And so this is an investigation that is still going. Who's responsible? Now, there are some reports that suggest that the Iranian army threw those projectiles. The U.S. side says it's too early to tell, so it's not really clear yet who the culprit in this attack is. But the latest reporting suggests that it's the IRGC, Paul.
We need to talk about Iraq as well, which the country really wants to lift its production quota through OPEC to recoup lost oil sales due to the war. How much leverage has it got here? How likely is OPEC to accede to a wish like that?
Yeah, it's looking more likely by the minute, although it is worthy to note here that Iraq did say that that is not a consideration that it's taking yet. But if the quotas are not increased, so they want to increase from 4.4 million barrels a day, that is the pre-war levels, to about 5 million barrels. That is what the oil minister had said in May. And so if those quotas are not achieved, there is a possibility that Iraq is yet another country that leaves the OPEC alliance, Paul. And if you remember, just about a month ago, the UAE was the first country to sort of state its wishes and leave the OPEC Plus alliance because it wanted to produce more oil barrels. As those economic woes start to really ripple through the GCC economies. And Iraq, although not part of the GCC, is one of those countries that was heavily hit by the closures that we've seen in the Strait of Hormuz over the past couple of months or so. And so some interviews with the Prime Minister, with the oil minister in Iraq, suggest that if those quotas are not heightened by the OPEC Plus alliance, there is a very strong possibility that Iraq could be the second country to leave the petroleum alliance. Though, again, nothing is certain for now. They haven't said that they will leave it with certainty, but that is something that is quite very possible to happen if, again, they can't produce more oil barrels under the quotas by OPEC.
All right, Mideast correspondent Abir Abu Omar, thank you. Well, Javelin Wealth's Polka Mishra is still with us. So, Polka, we have seen the oil price declining pretty swiftly. What is this telling you about the supply-demand dynamic that we're seeing at the moment?
I think it is telling more about how the market is behaving and how much risk market is not factoring in more than the supply demand. The price went down quite fast, and that's on a very, very fragile truce and ceasefire. We still have 55 days or so left to come for the agreement, long-term agreement, to come through. And we've seen how many times both parties have moved back from these negotiations already, and even before that. So it's less about the demand supply and more how the market is reacting and not factoring in that risk of a re-escalation or possible. I mean, we saw this morning again that you were talking about the ship being attacked. So in terms of demand supply, there's of course there's the gap. There's also the reserves that have been depleted that need to be refilled. So I don't think that you're going to have too much. The pricing is more based on how much supply goes through, and that the reserves are going to have to be refilled. That's not a problem. The problem is how consistently the supply is going to come through, and you're already seeing questions from Iraq around increasing the production because they were heavily hit during the whole operation.
I think it is probably fair to describe this piece as pretty fragile, and besides the ship being hit today, we've had a number of other missteps along the road to where we are now. But bearing all that in mind, the trend for oil does appear very firmly downward. Do you have an outlook for the price year end?
If, of course, there's a caveat that if the peace talks continue as hoped, and if there's a resolution achieved, then we'll be in those 60s level again by the end of the year. But this is, of course, with that big caveat that we're not going to have another setback in these discussions.
Do you buy energy companies at the moment?
So we are not buying energy companies anymore. We bought the energy sector overall as a hedge, but we have exited that hedge now, as we feel that most likely we are at the end of this crisis.
I'd like to get your thoughts on gold as well. We've seen the price soften back down below 4,000 an ounce, and plenty of reasons for that, not just geopolitics, but also a potentially hawkish Fed as well. Where do you see gold heading for the rest of the year?
Yeah, so gold just like gold's been the casualty of the same as the dollar debasement trade. It's pretty much been washed out, is what we are saying internally. But we do think there's a place for gold in the portfolios. Look, gold has not behaved like gold in the last year and a half. You don't expect gold to run up 60% when equities are going up. So it's finally behaving like gold. It's more linked to where the dollar goes from here, which is again linked to Fed rate hikes or rate cuts, whatever comes through. We don't expect the US dollar to continue to be at this level of strength. We expect it to weaken slowly through the year. We do expect gold price to tick up a bit, not at the same pace as we've seen last year. And remember, central banks are still buying, so there is still support there, especially from China. So gold is still a holding for us, not the massive rally that we had, but it provides a good hedge to the portfolio as the dollar starts to deteriorate again.
Polka, we've only got a minute left, but in terms of the dollar, we're getting some interesting commentary out of the Fed at the moment. There's a consensus that there's a hawkish tilt, and then John Williams says rates well positioned to return inflation to a 2% target. So how accurately are markets pricing in the Fed's behavior at the moment?
It depends on which day you're asking that question, because market predictions are changing so quickly as well, right, Paul? So I would say that markets are a bit more aggressive in pricing 2 rate hikes. Fed might not need that. Hawkish language in itself will help a lot in terms of how markets price and how markets react. We do expect possibly 1 rate hike will be needed this year, as inflation is far from Fed's 2% target. Yesterday's data is, while the economic data is strong, Kevin Walsh has been very clear that he's focused on inflation, and above 3% down to 2% is a very long journey. And that's not going to happen within the year, and I don't think they'll be in a rush to get there.
Okay, fantastic analysis. Thank you so much. That's Javelin Wealth Management's Polka Mishra there. Still to come, more than 2.5 years after the first GTA 6 trailer, pre-orders finally gone live as anticipation peaks. We look at what it could mean for the broader gaming industry with NYU Stern's Joost van Dreunen. Their conversation coming up. This is Bloomberg. Welcome back. You're watching Insight. Take a look at that board. There's only one colour on it, right? That's red. We're seeing a very heavy sell-off across the tech sector today, but pretty much every other commodity is weaker as well. Across the energy complex, gold, silver, Bitcoin as well are down, but the Kospi in particular, you see it's stuck there, down 8.18%. That is because the circuit breaker was triggered due to a more than 8% decline. That is expected to be lifted in the coming seconds, so we'll be keeping an eye on how that moves in the next little while. Hang Seng off by 2.2%, but the tech sector getting hit pretty hard at the moment. Now, with tech in mind, Chinese mobile and consumer electronics brands are showcasing their innovations in wearables and connected devices at the Mobile World Congress. And our Chief North Asia correspondent, Stephen Engel, is there. Steve.
Well, China is not immune to the rising price environment that we're seeing reflected in the price hikes at the likes of Apple in many of its products, except the iPhones, but also, of course, Microsoft raising its prices on Xbox, Sony also recently on PlayStation, and a number of different consumer electronics makers in the West have raised their prices quite considerably. But keep in mind, China has stem-to-stern supply chains, so they are somewhat shielded. But again, a lot of these operators or these manufacturers are already operating on razor-thin margins if they're even profitable at all. Now, here's a company called Quectel. You've probably never heard of it. I haven't heard much about it, but it's a large chip module maker. Their customers include the likes of Qualcomm, MediaTek in Taiwan. But even they are branching out into consumer electronics and kind of getting their brand out there and perhaps even abroad. For example, they make AI-infused plush toys. This is a smart pet that can interpret your emotions. It's basically web-based to AI servers. There are others that have AI Edge embodied into the toys. This, though, we're talking about prices a lot, Paul. This price at less than $15 US. We could probably see, though, as component prices go up over the coming months, if not years, you're going to see this probably retailing, at least if it goes abroad, much higher than $15 US. Come on over here. Again, I talked about the chip modules, but they're also branching into other consumer electronics. These are very hot. Just about every single one of these consumer electronics makers are doing wearables, eyewear, earwear, wristwear, and the like. This has automatic translation, so I can see English and Chinese through here. It also essentially can take pictures. Life blogging, they call it. So that is really all the rage right now. Wearables that are infused, at least they claim, infused with open source AI. Here's my story.
Chinese homegrown AI-infused electronics brands are ready to fight for global dominance. China's mobile ecosystem is already much more about intelligent mobility across many interconnected product lines. Everything from feature-rich foldables to super-fast supercomputers on wheels. No lag, boom, it goes. And from humanoid walkables to a wealth of AI wearables.
Oh great, now I can life blog my every waking minute.
IDC says global wearable device shipments for one grew more than 9% on year in 2025 on the back of an array of new products in smart eyewear, wristwear, earwear, and elsewhere one would want to surveil themselves.
Yes, the IoT is finally happening. The wearable is finally happening. We've been doing research on those things for years, but AI is the enabler. So I'm super excited.
But with hyper competition at home, it's no wonder Chinese companies want to take their indigenously grown grooves to, well, other dance floors.
Chinese consumers are digital natives and tech enthusiasts in a way that nobody else in the world is. So Chinese brands that are developing product for China first often find a receptive audience there that they can then, I think, iterate and get better at unique things and then take them global when perhaps other markets are ready for it.
Baker's Canada-based brand strategy agency Totem, along with Rakuten Insight, have just published their latest rankings of Chinese top 100 global brands. 7 of the top 8 Chinese brand names listed here with the best brand equity abroad are in consumer electronics.
The report found that Gen Zers abroad tend to be more accepting of all things Chinese, including Chinese culture and Chinese consumer electronics, than, say, older generations or older age groups. It's a phenomenon that some have coined China maxing.
The young kids, they look at the product, they look at quality, they look at how well they serve their needs instead of where it just comes from.
The manufacturing, tech, and innovation is happening in China, and now they're starting to get their kind of marketing chops.
Totem says it may be in these Chinese brands' best interest to actually raise prices abroad, not only to help dispel negative connotations of cheapness, but also ward off price wars at home and protectionist sentiments abroad. Regardless, the gloves are off, and Chinese brands are gunning to come out on top.
And you know, with Apple coming out likely in the fall with its own foldable phone, China's been doing it for quite some time, not only for OEM, other big manufacturers, but their own brands. This is Lenovo. They, of course, have the Motorola brand, the Razr brand of foldable phones. This is the flip phone from Motorola, or Lenovo, I should say, which is more likened what we're expecting from Apple, flipping upwards like that. We'll have to see, though, as Apple, not in the iPhone brand right now, but in the other products, including the iPads and also Macs, raising those prices because of higher component prices, because of higher memory chip prices. We'll have to see. With Chinese manufacturers, they're already at a little bit of a lower price point, whether they too in the coming months are going to have to raise the prices given the shortage of components and memory price hikes.
All right, Steve, thanks so much. That's our Chief North Asia correspondent, Stephen Engel, there in Shanghai. Now, it's not just Apple. Xbox prices are going up again. Microsoft announcing a third round of hikes in just over a year, and it's blaming a surge in memory and storage costs as AI demand continues to squeeze global supply chains. Now, the increases starting August will push the flagship Series X to about $800, and that's a sharp jump from its original launch price, and they're part of a broader trend that has also seen Sony and Nintendo raise console prices as well. The timing, though, is especially striking because these hikes come just as the gaming world zeroes in on what could be the biggest launch the industry has ever seen. Pre-orders for Grand Theft Auto 6 have been open for almost 24 hours now, setting off a global rush for a title that's been more than a decade in the making. It's already testing how much more gamers are willing to pay. With an $80 base price, a push towards digital-only distribution and expectations of billions in sales, Grand Theft Auto 6 is not just a game launch, it could redefine pricing power, monetization, and the economics of blockbuster gaming. Some even see it as an early test of consumer sentiment. Shares of Take-Two Entertainment have rallied since the pre-orders were announced. Well, joining us now is Joost van Dreunen, who teaches about the video game industry at the NYU Stern School of Business. He is also the author of the book One Up, Creativity Competition and the Global Business of Video Games. Professor, thanks so much for joining us today. And I just wonder if we could start by having you set the scene for us. I don't think it's underselling it to call this a cultural event. Grand Theft Auto 5, 12 years ago, sold $1 billion worth in 3 days. I mean, that's bigger than any movie, book, or any other cultural release ever. What are your expectations for Grand Theft Auto 6?
My expectations are even bigger. You get the sentiment, but so often our attention goes towards tech industries and their ability to scale and excite consumers. But games and culture tend to be those key moments in any of these companies' histories where they define the next generation. And so Grand Theft Auto 5 was a blowout success by many standards, and the expectation is that Take-Two will be able to repeat and excel that earlier example. Early sales indicators give you forecasts of around 38 million copies in the first 12 months, somewhere between $3 and $3.2 billion for the company in total revenues. It's hard to overestimate it. The question is not whether it's going to be a big cultural moment. It is whether or not it's been priced into the stock already.
Yeah, and Professor, I was there 12 years ago when Grand Theft Auto 5 came out, and I filed a story, some of which we'll just show you on Bloomberg. Yeah, it was amazing. And you had to buy a physical copy back then and still queue up to buy the thing. Now, this edition has been delayed for some years. Can you give us a sense of just how much time, how much money has been invested in bringing this to market, and how important it is for Take-Two Interactive?
That's an excellent question, and I'm happy to hear that you were part of the team back then. It's a 12, 13-year development cycle. These companies, they tend to start immediately after launch on the next thing. It's part of how they de-risk the financial model that comes with this. You have to imagine, employing thousands of people for that long of a period. You're talking about $1 billion easily. It's probably closer to $1.5 billion, $2 billion total in what they sank into development and marketing, and so the risk profile is substantial. However, the upside is enormous, right? You already pointed out within 3 days they sold $1 billion the last time around. That's probably going to be a repeat this time around, and it's a immense moment for Take-Two Interactive. What's different, of course, is that back then everything was very much physical. It was very much a product-based business where you would sell a single copy to a consumer. Since then, we've moved into digital distribution, and particularly microtransactions and what Take-Two likes to call recurrent revenue from its consumer base. That has been an enormous accretive source of income to their revenue model. And so out of the $5 billion that they currently make annually, they're going to add another $3 billion on top of that. And so in many ways, it's not just a continuation of the success of a franchise, but it's also an evolution of how they do business with their consumer base.
Yeah, no, it was interesting to see that transition, because the long gap, that was that period that online gaming became extremely popular, and then Grand Theft Auto 5 just keep making more and more money in the interim. Is that something you anticipate we'll see with Grand Theft Auto 6 to the degree that we might never see a Grand Theft Auto 7?
That's an excellent question. So for me, the difference between Take-Two Interactive and, say, Electronic Arts or Roblox or any of those kind of companies is that what Take-Two is launching is not a new software title. What they're launching is effectively an operating system. Part of the financial success that we've seen over the last decade coming from this franchise alone has everything to do with being able to cater to and cultivate an online community, keeping people engaged. When you look at live streaming channels on Twitch and on YouTube consistently for a decade now, Grand Theft Auto, the franchise, has been the number 2 on all of these channels. And so the audience engagement is something of a whole nother level. We're talking Taylor Swift, Beyonce type of category here, meaning that you have deep loyalty and you're selling in against that audience. So the real challenge is, can we transition those people from GTA 5 to GTA 6? Can we invite them over? And the way that they're doing that, of course, is by removing all of the obstacles. An $80 price tag for the base game, I think, is a very aggressive but earned, starting point. And from there on out, you can see, of course, the door open up to other additional things where unlocks occur really at a premium edition of $100. And my guess is that very soon we'll hear of like a $200 and $250 version that's a collector's edition. And so they're transitioning their audience not just from title to title, but from one digital, social, online environment into the next one, and with all the accoutrements that you would expect to go with that.
Yeah, you mentioned the price, which has caused a little bit of concern, but the true believers are probably going to pay anyway. But there's also no physical disc, which has made collectors unhappy. Those who wish to sell their games as well, secondhand, are not particularly happy too. What do you make of these sorts of developments in the video game industry, and what it means for loyalty from customers and for the reputation of the companies putting these products out?
It's a bit of a boondoggle. You have to imagine that people, of course, love it so much that they want to have something tangible. In the same category that you see music fans collect vinyl, you see movie buffs have the DVDs all lined up nicely. Gamers are very much the same in that they have an affinity for collecting things. For that exact reason, I think the base game is going to be digital, and that's the mainstream one for the people that just want to play, they want to be part of the cultural moment. But the diehards, they get an opportunity to get the special collector's edition. They're going to have like little statues and swag and keychains and what have you. It's not dissimilar from what you see in things like Pokemon or Nintendo franchises overall with Mario, where the upsell isn't only in more game content, it's also in a broader experience. I expect that Take-Two Interactive is going to be leaning into that very heavily. They have a rich history of coming up with really creative ways to sell their games and market their games and kind of keep people in the loop. And so for that reason, of course, there's going to be some hemming and hawing early on because it's an aggressive price point, and also it's only digital. But if you look at the numbers, 80 to 85% of Take-Two's revenue comes from digital channels, as is the case for every other publisher nowadays, right? So digital is regarded with some skepticism by consumers, but they all get into the pool anyway. So I think it's really about the upsell and enriching the experience for the audience.
There's evidence that other developers have been avoiding releasing games during this period because of the imminent arrival of GTA 6. What evidence have you seen of that, and how long do you see this game just sucking the oxygen out of the broader ecosystem?
Yeah, it's a real problem for publishers. So last year we have had a few delays on GTA 6, and as a result, you see Electronic Arts in a season ago do very well with Battlefield 6. Of course, it's a great game, but also very clearly that was in the absence of GTA 6. They were able to kind of claim the market for themselves. Nobody should, in their right mind, go against one of the largest releases in a franchise history, only to know that they're going to lose out, right? This is very much a blockbuster-driven market. Winner takes most. You win or you die in gaming, and so to go up against Strauss Zelnick and Grand Theft Auto 6, you'd be stupid to do that. And so you want to kind of give them the runway, give them the road, see how audiences react. Chances are that there is still going to be some gravitational pull from sort of the Fortnites and the Roblox type games out there. Because live services games, they tend to have deep loyalty and people play those games as part of a routine of daily life. Often around AAA launches, you'll see sort of a 2-week absence, you see a drop in usage, and then very quickly people move back once they've cleared the first-person campaign. In this case, GTA 6 launches with the first-person campaign. So for that reason, I think we're going to see 2-3 weeks of absenteeism around everywhere else. There's going to be a quiet marketing. There's going to be fewer people on the servers, everybody else. And then slowly they'll get back to what they were playing beforehand. But, it is really up to Take-Two. They have the initiative right now.
Yeah, and to your point, I mentioned during my story 12 years ago that if you recognized anybody in the footage, you should take a good look because you won't be seeing them for a while. But more broadly, what is this game release going to tell us about consumer sentiment, if anything? Or is this game just sort of a one-off where people just find the money to buy it and upgrade their console?
It's really a question of if you're not playing GTA 6, are you really a gamer? It's sort of the big launch. Most people will identify very much through this in the same way that music and film can sort of define a generation. GTA is a franchise. It's defined a generation of gamers. So I suspect that that's going to be a big deal here. What it will change for the industry overall is that the premium titles can now start charging $80 a pop, right? EA does this already. Nintendo does this too with Mario Kart World. All of these are high-end, top-shelf games. Everybody else is going to have to hold short and be a little bit more modest in their pricing. But it speaks to really finding new ways to price consumers or offer a pricing scheme to consumers that suits them. After a period of consolidation where we looked for economies of scale and really reaching out to the large-scale audiences and make games mainstream, more and more in recent years do we push into a luxury category where top shelf titles just command a higher price, and it really forces the question for everybody else in this space. Does Ubisoft have the potential to also charge $80 for its titles? I don't think so. I don't think that they're quite there yet. And so you have to then decide where you're going to be next as a publisher. Consumers will do the deciding for you if you don't.
All right, Joost van Dreunen, NYU Stern School of Business adjunct assistant professor, thank you so much for your time today. Still to come, shares of Apple supplier Lingyi surging in its Hong Kong debut as investors bet on demand for AI hardware. We hear from company's chairwoman next. This is Bloomberg. Welcome back. You're watching Insight. Apple supplier Lingyi jumped in its Hong Kong debut, part of the city's busiest month for listings this year. Its chairwoman, Cathy Zeng, spoke to us earlier about the company's growth ambitions and how it's navigating the memory chip shortage.
We are lucky that with the past 20 years, we started our company, we become the top 3 of the world of all the small components. And then we've been involved in more than 20 different areas. 1, 2 is because of this, then doing the acquisition, so we develop our components into module. So we are doing thermal module, doing the hinge module, trackpad keyboard, all that module, and also chargers. And then through the module, then we become the FATP manufacturing. So we
could you explain FATP for our audience who may not
final assembly.
Yeah, okay.
So it's a system-like final assembly. So from components to module, and then to the final, the whole devices. We have this kind of either R&D and engineering and manufacturing capability. And then all around the world, we have 80 different factories around 15 countries, so we are very international. So then this is the fundamental of our company for the past 20 years. And then we see the trend from the electronic consumer, and then it's going to go to the AIDC. It's going to really up for the next at least 5 years, though we are fully speed to focus on that, which is we can share similar of the process, and then the more complex and difficult of the capability that we kind of shift and copy that into the AIDC industry. And then we are already support all the famous name already. Then that's going to be another trend. And then we also use the hardware that then we make the humanoid robot. Then from the components also to module and the whole system and testing, and then the quality standard, and also we help to do all the justification and the service. And then we also, because we have around 100,000 of employees around the world. Outside of China, we have 30,000. Then the whole factory, we also have a huge amount of data that we are going to share with all the industry together. So that's the key, and then we believe we can do a lot of achievement during this growth.
We just got news that Apple is hiking the prices of its iPads and MacBooks on the back of those memory shortage. So I'm wondering, as a major supplier, how big of a hit is that going to be for your demand and for your margins?
Actually, we knew that earlier because we're very the co-supplier of the industry, so we knew that earlier. And then we already kind of shift our capability and capability into phone, into notebook. That 2-1 is still grow. And then also with this year, the new affordable things is going to come, and then we focus on that. We have a lot of new technology for the new phone, and then we believe that can help us to digest our capacity. So would not really influence too much to us.
That's Lingyi chairwoman Cathy Zeng speaking to Bloomberg. And that is it for Insights. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.